Happy Friday. So every Friday you hear me talk about how I say the dollar is dead. What does that mean? Why should you care? And what can you do about it? So what does it mean? Essentially means that the dollar is losing value because of inflation and other reasons. Government spending too much money, other countries not trusting it as much because of the government deficits and other things. But why should you care? Because the money you have in savings is losing its value. What can you do about it? Well, you can diversify. So first, I'm going to get into a couple clips. Cathie Wood from ARK Investments. We've got Michael Saylor clips from, he was speaking on a podcast regarding the dollar, regarding other currencies, and regarding things you can do to diversify. And then an article regarding what China and Russia are doing with respect to the dollar and other central banks. First, a little bit about my channel.
So take a look at the playlist page for Hack Your Finances. You can obviously subscribe at the top. Playlists to get out of debt, credit cards to use to your advantage, and investing for passive income. At the bottom, we've got a 6-lesson series to help you get out of debt. Thanks for watching and supporting the channel.
All right. So the point is, do what the rich do. They don't sit on dollars. So let's look at this first clip. I've got two from Michael Saylor, but this first one is regarding, and he gives a very excellent example of how dollars or other currencies lose their value over time.
Money is a store of value, and there are multiple monies, and they're not created equal. So let me give you the world's worst money. The worst money in the world is like Argentine pesos or Venezuelan bolivars or Zimbabwe dollars or Nigerian naira. Weak money. The official inflation rate in Argentina is 105%. But that's the official rate, which is that understates it. The actual inflation rate would be higher. And if the inflation rate is running 100%, that means your money is losing half of its value every 12 months. That means that within 10 years, you have nothing. Okay? So bad money, bad currency or bad money loses all of its value over the course of a few years. In Venezuela, you lose all your value in 36 months. In Argentina, in 10 to 20 years, the Argentine peso was 1 to the dollar 21 years ago. If you had $1 million 21 years ago, the Argentine peso right now is about 480 to the dollar. So that's not a 99% loss. That's a 99.8% loss, right?
In how many years?
21 years. Okay, so what I'm saying is you don't have money if you have weak currency. Now let's take strong currency. Well, the strongest currency in the world is the dollar. That's not money. You're losing 99% of your wealth over the course of 90 years in the U.S. dollar, maybe more. The U.S. dollar, the only difference between the U.S. dollar and the peso is whereas it takes 20 years to lose your family's fortune in the peso, it takes about 90 years to lose your family's fortune in the dollar, right? My house in Miami Beach was $100,000 in 1930. It was appraised at $46 million a few years ago. Do the calculation. It's on a path to be worth $100 million, which means that the U.S. dollar will have lost 99.9% of its value over 100 years. Warren Buffett knows this. Charlie Munger knows this. Basically, the bottom line there is your money in the bank isn't money. Okay, so the answer is you shouldn't have any money in a bank. Right? You're basically losing 7% of all your wealth every year in a good year. If it's the dollar, you're losing 15% of your wealth in a not good year. If it's the dollar, you're absolutely losing all your money over the course of a decade. So that's kind of weak money.
All right, so I should have set that up and said, for those of you who don't know, Michael Saylor started MicroStrategy years ago. He was a CEO. And he's big into Bitcoin. You probably saw MicroStrategy in the news, basically because of how much Bitcoin they've bought. Now let's listen to Cathie Wood from ARK Investments. I'm sure you've seen her regarding Bitcoin and other types of investments, whether it's Tesla or you name it, what they invest in and how they see and what their worldview is. Let's watch her.
What's your analysis of why it's moved the way it has?
Okay, up dramatically.
Right.
You have the ETFs. There's something else going on around the world. There are currency devaluations taking place that people are not talking about. The Nigerian naira is down 50-60% in the last 9 months. Egypt just devalued by 40%. Argentina continuing to devalue. I think this is a flight to safety, believe it or not, taking place. A hedge against devaluation, a hedge against a loss of purchasing power and wealth. That's very important. And we saw this even here last year in the United States. Regional banks imploded. Bitcoin went up 40%. Bitcoin does not have counterparty risk. I think, and we're putting out a piece in the next few weeks, which is, this is both, get this, a risk on asset. And so you talk about the NASDAQ.
The risk on.
But it is risk off. I remember we got in at $250 when Greece was threatening to leave the euro, right?
But is that folks that are speculating about currency, or is that folks in Nigeria and in Greece and other places saying, I got to get my money out of this currency and move it themselves? Do you see what I'm saying?
Oh, yes. I think this is an insurance policy against rogue regimes or against just horrible fiscal and monetary policies.
Okay, great. So we've kind of shown that everyone is waking up to, I should say, and more information is coming out about the fact that, well, hey, now that inflation's so high, people are realizing, wait a second, the dollar's not buying as much as it used to. It's losing its value. So the money I have in my savings account isn't worth as much a month from now, 6 months from now, a year from now. Now, this has always been happening. It's nothing new. It's just that people pay more attention when it happens quickly. We had not that long ago, was a year ago or so, 8% inflation or more. Now that number is across the board. It takes in a lot of variables, but we all know that we went to the gas pump and used to buy $1.50 gas, and it seems like yesterday, and now it's $3, $4, $5, $6 depending upon where you live. We all know that we used to go get some steaks or some beef, and it used to be X dollars a pound, and now it's twice as much in a short period of time. So people are realizing, wait, this is a problem. Now, there's short term and there's long term. I think it's a good thing or a benefit of this inflation we just had, because people are waking up saying, wow, over time, it really does lose its value. What else can I do? So here's a clip of Michael talking about what else a person can do to try to preserve their wealth.
For any amount of money you want to keep the rest of your life, if you want to give it to your kids, if you want to actually retire on it, anything that's investable asset, you would put it in Bitcoin. You would put it in the strongest possible world currency, the global money, and that's Bitcoin. You're not going to get rich investing in dollars, and you'll lose all your money if your dollars are in a weak bank, and if your dollars in a strong bank, you'll just get poor slowly.
All right, now lastly, I just want to throw up this article because I think it's very important. There have been countries throughout the world that have gotten together and they want to use less dollars, and that will impact us. This is China and Russia. As you can see here, it says that the Chinese yuan, their currency, dethrones the US dollar as the top currency traded in Russia. In other words, they're using the Chinese yuan instead of the dollar in their day-to-day trade and throughout the country. It goes on to say also that central banks throughout the world, obviously other countries have their own central banks, that they're buying more gold. So these central banks have reserves. They can keep the reserves in many different things. And they can keep it in US dollars, or they can keep it in things like other currencies or commodities such as gold. Some countries have even turned towards Bitcoin. All right, so now we know that the rich central banks of other countries and other countries are turning to currencies other than the dollar. What does that mean? What can you do? Well, look at this chart. When you think about diversification, in the past, people would normally talk about diversifying your investments or your assets, and they would put it typically into three broad categories: stocks, bonds, and cash. What I talk about is just the cash portion of that. Now, this is not financial advice. I'm not a financial advisor. I'm just pointing out what I see, and I'm showing you what I do. So, like I said, look at this chart here. This is just a representation of things you can do other than just holding cash. So as Saylor said, hey, you might have a couple months worth of expenses saved up in cash. Maybe you have a year or more. But if you don't need it, you're not going to touch it. Over time, it's going to lose value. So maybe you shouldn't hold all of your cash, just cash, because of inflation. So as you can see here, you can put it in things like CDs or treasuries, corporate bonds to try to beat the inflation rate or just stay on par with the inflation rate so it doesn't lose its value. You can do other things such as gold and silver and Bitcoin. So you can create a basket of commodities and other investments to hold instead of cash. So that is exactly what I do. And now let's go over, and I've been doing this for a while every Friday, showing the prices of various alternatives to cash. So I've got some cash sitting in the bank for a couple months. I've got some cash in CDs and treasury bills. At the moment, actually, I don't have any CDs. I just have some T-bills. And then I have gold and silver, which I buy every 2 weeks. And I have Bitcoin, which I've been buying for a while. And at the moment, I'm just letting it sit because of the point in time where it was about to be halving coming up. I'm not purchasing anymore at the moment. But here's how the prices have changed. So take a look at this first chart. I like to use this site because it's got the gold and the silver. They update in real time. And then you've got Bitcoin and Ethereum. Here we are at gold up to 24.26, an all-time high. We don't know where gold's going. It's a new high, which means it's in price discovery. Who knows where it's going to go? Other central banks are buying it, like we mentioned. So we're not really sure where that's going. Silver is up tremendously, 29.67. Then I always just point out Bitcoin and also Ethereum because these are the first two. Bitcoin often said to be the world's gold, and Ethereum often said to be the world's computer. Obviously, there are about 10,000 different types of cryptocurrencies, all doing different things. Bitcoin stands out as completely different than the rest. I won't get into why now, but that's considered digital gold. So it's at 69,586. Ethereum's at 3458. And I compare these to the prices when I first started doing this video so you can see how it's changed. Now, we have inflation, so the dollars sitting in your account haven't changed. Maybe you got a little interest. Of course, you got to pay taxes. But there's other commodities that would have helped your dollars to grow even more. Then we look at checking accounts, etc., but that's on a monthly basis, and that's not out yet for last month. The inflation number isn't out yet again, at least from Statistica, so we're going to leave that one there. And lastly, I do look at the 10-year treasury. I think that's important because a lot of things seem to move. They're not directly related, but they're correlated. So when you see the treasury go up or the treasury go down, you'll see things such as mortgage rates go up or down. It gives you an idea of what the market think is going to be happening in the future. And that's 4.94% on the 10-year treasury. So there you have it. What I'm trying to point out, and I think you're going to hear more about this, is that you don't have to keep your cash in US dollars. You can keep some in an emergency fund. You can then convert some to gold and silver as a hedge against inflation so that you store that value and you're not losing value of the dollars you've saved. The system is rigged against you, as you can see, because as Saylor pointed out, the US dollar over the course of 100 years loses 99% of its value. So if all your savings are in dollars, you're just losing value. But if in something like gold that over time has steadily increased, I've got a video I'll link down below showing the difference between saving $100 100 years ago and buying $100 of gold 100 years ago. And the difference was staggering. It was the difference between having $10,000 now in gold versus I think it was $2,000 or $3,000 maybe in US dollars. Anyway, I put that down below, but thank you for watching. I hope this has been helpful and I hope this is enlightening and over time gives you an idea to think, you know what, there are alternatives. I don't want to lose my money. Big banks aren't on your side. They don't care about you. Government's not on your side. They don't care about you. You have to take control of your financial freedom. Get out of debt and invest for your future, particularly with things that create passive income. Again, thanks for watching, and I always appreciate a like and comment down below what you think. Thanks.